How's everybody doing today? Welcome back to the channel. Today I'm going to be talking about the best investment strategy during a recession. Right now we're getting pretty close to a recession, if not already in one. So I'm going to be telling you best investment strategy in my opinion, what you guys should be doing to get ready and actually buy back in. Hopefully making some good profit as everything actually starts turning back the other way. So today it's up about 3%. The Dow is up about 3%, which is pretty good. But yesterday we saw almost a 10% dip. So we're still far from recovering. If not, it could come down a bit more. So you guys are probably not wanting to buy back in, or the average person, maybe not you guys watching, but the average person is right now selling more than buying, which is pretty bad in my opinion, especially at this point. And I'm going to be telling you how you should do it. So I'm going to be telling you what I'm doing, and then if you guys choose to do it, you can go ahead and do so. Obviously, do your own research. Don't just blatantly copy me. Obviously, make sure you fully understand what you're getting into before you do it. So let's just jump straight into it. I'm personally moving money into my exchanges and slowly buying back in. So what I'm doing is I'm moving money away from like my savings right now. If you have money in your savings right now, it's basically a waste because you're getting almost zero interest because the Feds recently cut the rate to nearly zero. So your savings account, if not already, if you have an online savings account that usually pays 1 to 2%, it's now going to get paid like 0.5%, if not nothing soon. So what I'm doing is I'm moving basically not all my money, but a lot of my money into my brokerage. And I'm going to be I'm putting all the money into an iShares bond, SHV. What that does is that's basically yielding me about 1 to 2% in dividends, and that's monthly. So that way I can actually grow that money, and then I can actually have it ready to be deployed. So if I want to buy something, I can sell my iShares, and the volume is pretty decent. It's not crazy, so I should be able to sell off my SHV, my bond ETF pretty easily, and get into my position that I want right in my brokerage. Now the thing is, it may look kind of volatile if you look at the 5-day chart. It looks kind of volatile, but it's not at all. If you look at the price difference, it goes from $10.90 to $11 to $1.11. So it's literally a 10-cent difference. So like today, it's up 0.01 cent. So SHV is really a very, very stable stock. It rarely moves, if ever. If you look at the yearly or the 1 month chart, I don't know why Google doesn't like to load charts. But if you just go to if you just go here, in the 1 year, it didn't move at all. It went from $10.50 to $10.91, even went up. So it barely moves. So it's basically a very stable stock that literally only pays you about 2%, which is a lot better than the savings are right now. But the reason you have this is so that you can slowly deploy it. So if you want to be really safe, which is what I'm partially doing, I'm investing about half of just to the broad stock market. I use VOO, which is the index. There's also SPY, which is another ETF. They're both the same thing at the end of the day. And I'm slowly, like every week or so, I'll just buy like a share or a few shares of the Vanguard ETF. That way you can slowly buy back in while dollar cost averaging. So if next week the S&P falls another 10%, another 20%, then you can still buy back in slowly because you didn't go all in. And then while doing so, you'll have that money ready. You won't have to wait like a week for your money to clear, because you'll have the money in your brokerage. Now, I recently recommended you guys to sign up for Webull. I was using Robinhood for a lot of it, but obviously Robinhood was going down and people were just not happy with it, if you guys saw my video on it. So a lot of people actually on my channel signed up for Webull, and you guys are liking it so far. I've moved money into there, and I'm going to be getting ready to put some more and buy some more shares with it. If you guys want to sign up to Webull and start investing for yourself or continue, and you want to do that, you'll get 2 free stocks if you sign up. I'll have a link down in the description. So all you guys have to do is deposit any amount, and then you guys will get 2 free stocks worth up to 1,500, I believe, if you guys get lucky. So I'll have that down below for you. Now, if you guys want to be a bit more aggressive, which I'm buying some VOO, but I'm not fully. If you guys want to be more aggressive, honestly, if you buy any of the S&P top 500 stocks or the top 50 I have right here, honestly, if you buy pretty much most of these, you will probably make a profit if you hold them for the next 2 years. Now, obviously, don't just pick anything. Be more specific, like literally Apple, Microsoft, Amazon, Google, Facebook. Those you'll like for sure make your profit. Probably the top 10 you'll easily make profit on if you just buy them and hold them for the next 2 to 3 years max. Specifically Apple, Microsoft. Microsoft is actually a pretty good buy because the CEO, obviously, Bill Gates left. Think of like a few days ago now. Like something like a Coca-Cola is like, these are completely recession proof. I would stay away from Exxon and like any of the gas company just because those are I don't think those will do too good over the long run. But other than that, those are pretty decent. You guys can't really go wrong because these are pretty much recession proof, most of them. Obviously, please do research before doing into like investing into any of these. Specifically, I bought some TSLA, Tesla, obviously, this morning at about 410. So I'm actually pretty happy at how much it went up. I believe it went up about like 8% or so. It went up like 10% since I bought some this morning, so that's pretty good. But this is like a stock that I'm going to be holding for a very long time, so that either way, that's going to be pretty decent. Another one is for example, Google. This is like completely recession proof, but it's more aggressive than just buying a broad index fund, because if it goes back up to its height, you'll make about 20-30%. But if this goes back, or if like Tesla goes back, or if a lot of other companies, you'll make about 50% if it goes back to those all-time highs. But right now, it's down about 30%. Google, and obviously Google owns YouTube, it owns everything. You guys are using Google right now. Google is pretty much recession proof. It's not going anywhere anytime soon. So this is like a very, very safe bet up to its height of 1,500. So like stuff like that is very good. Obviously, dollar cost average it, in my opinion, over the long run. Like, invest consistently over this recession or downturn of the market, and you will like most likely come ahead. Unless you're buying like crazy, weird, dumb stocks, you guys will most likely be ahead if you just pick and go safe, which is what I'm doing. So yeah, that is pretty much it for this video. This is probably the best recession guide in my opinion, just because you're having your money still make money for you in these bond ETFs, and while doing so, you're in the same time slowly buying into companies that could probably yield you a good amount of return as the market turns around. So that is it. Thanks for watching, guys. Once again, if you want to invest in Webull, I have a link down in the description. That's probably a great way to start if you haven't started investing already, or if you have, just have another brokerage to use, which is pretty decent in my opinion. So thanks for watching. If you guys want to subscribe to this channel and help me reach my goal of 1,000 subscribers by the end of 2020, that would be really appreciated. And I'll see you on the next video.